Public Television in Buffalo, WNED-TV, Channel 17.
In our report, personal income takes a big jump in January.
The National Economic Commission fails to agree on a deficit solution.
And the Dow ends well in the red on Wall Street.
The Nightly Business Report, produced in association with Reuters, the world's largest electronic publisher. Made possible by Digital Equipment Corporation, offering complete computing solutions to give every desk a window into your entire organization. By Kidder Peabody, one of the world's major investment firms, and GE Capital, providing business with comprehensive financing. Two companies of GE Financial Services. By A.G. Edwards, members of the New York Stock Exchange, serving individuals and businesses through more than 340 locations. A.G. Edwards, investments since 1887. And by contributors to public television.
Good evening. In another possible inflationary trend, the personal incomes of Americans rose by 1.8% in January, the biggest gain in 15 months. But as New York correspondent Scott Gervey reports, consumers were slow to spend their newfound dollars.
Personal income in January rose by a stronger than expected 1.8% compared to December. At the same time, personal spending rose 0.1%.
In terms of strength in consumer spending, this is the best of all possible worlds. Good growth in consumer income, good growth in consumer spending.
But several factors work to inflate the personal income numbers, including a pay raise for federal government workers, cost of living adjustments to several federal transfer payment programs, and changes in contributions for social insurance programs. And the personal income statistic is historically volatile, up 0.9% in December, down 0.2% in November. Because people spent less than they gained in income, the savings rate rose to 5.8% in January, up from 4.8% in December. But economists warn that this one-month jump in the savings rate does not mean Americans have significantly changed their savings habits.
It would be a very healthy development to see income continuing to run ahead of consumption as it did in January, because what this economy needs is more savings. However, there are a number of reasons to believe that we're not going to go back to those higher savings rates that we had in the past years compared to the last couple of years. There's a number of demographic and lifestyle changes that essentially keep savings lower as a percentage of income than they used to be.
And others believe the jump in income will not be repeated this year as the Federal Reserve moves to tighten monetary policy.
The money supply has experienced very little growth over the last 12 to 18 months. That eventually affects production, employment, and income. So what we're basically saying is, well, things are good now, and they'll probably be very good for a few more months. But after that point, then things will likely slow down very dramatically.
Most economists believe the rate of growth can be slowed to fight inflation without causing a recession. In New York, Scott Gervey for the Nightly Business Report.
While Americans stepped up their saving in January, they continued to pull money out of savings and loan associations in February. Federal Home Loan Bank Board Chairman Danny Wall today told Congress that withdrawals from S&Ls totaled $4 to $5 billion last month. But in an interview with Reuters, Federal Deposit Insurance Corporation Chairman William Siegman downplayed the seriousness of that move, saying it came about because of higher interest rates elsewhere, rather than because of a lack of confidence in the thrift.
At this point, I'd say what we're seeing is relatively what one would expect to see in a period of increasing interest rates. And in the thrifts, perhaps some increase simply because there's been a tremendous amount of publicity. But there are no real serious runoffs. It's very slow, and I'd say it has to be handled, but it's nothing to be alarmed about.
Siegman said that S&Ls tend to be more threatened by interest rate rises in banks. And on Capitol Hill, Treasury Secretary Nicholas Brady said if Congress enacts the Bush plan to bail out the thrift industry, savings and loans should see their cost of funds drop by about 0.75%. Paul?
The stock market moved higher on the opening this morning as some buyers were impressed by yesterday's final hour rally, which lifted the Dow Industrial Average from a neutral position to a closing gain of just over 8 points. Also a benefit was a growing consensus that neither West Germany nor England would push their interest rates higher over the near term, and that boosted the dollar and bond prices, which in turn had a positive impact on stocks. At 10 a.m., the Dow rose nearly 12 points, while advancing issues took a wide 7-3 lead over losers on respectable volume. The early upturn began losing its luster during midday for several reasons. First, there was that report of the fairly strong 1.8% rise in January personal income, and that carried inflationary implications. And second, fears were building that the new Bush administration would lose a lot of clout if John Tower were defeated in his attempt to become defense secretary, which appears likely. And third, rumor had it that the Japanese government was becoming more imperiled by the insider trading scandal over there. Against this background, then, the market steadily deteriorated until 2 p.m. The industrial average was down 2 2/3 points, with 7 stocks lower for every 6 higher. Prices eroded badly for the remainder of the session in reaction to a sell-off in bonds and a pickup in futures-related sell programs. The Dow Jones Industrial Average slumped to a closing loss of 15.35, putting it at 2243.04. Theoretical high way up around 220 or 2270.50, and the low down to 2234. Trading volume today moved up some 30 million shares from yesterday's pace, and a lot more down volume than up volume. The Dow Transport Index has been off every day this week. Now it's off a total of 30 points in the 3 days, off 9.05 today. Utilities off nearly a point. Dow 65 lost 6.13 in the closing tick. Not too bad, a minus 277. Standard & Poor's 500 lost exactly a point and 3/4, exactly a 2-point loss in the 400, and exactly a 1 3/4 point loss in the 100. Commodity Research Bureau March Index was off just over a point and 1/4. New York Stock Exchange Index lost exactly 3/4 of a point. Value line down 0.40, and the Wilshire 5000 lost nearly 11 1/4 points. Bond prices moved nicely higher early today thanks to the growing belief that there would be no near-term interest rate increases by West German or British monetary authorities. But the market hesitated after the report of that much larger than expected 1.8% rise in January personal income, since that rekindled fears of inflation. Gradually, sellers began to dominate. The high Fed funds rate throughout the session was also worrisome to traders. So by the close, tax-frees were down about 3/8 of a point. Corporates gave up good early gains to end mostly unchanged, and longer-term governments lost a half point on the average, like the 30-year Treasuries down 17/32. And Shearson Lehman Long Treasury Bond Index down exactly 6 1/2 points, and Fed funds closed on the high side at 9 3/4%. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets, silver closed sharply down after the metal failed to rally as expected. Platinum and gold also fell. The dollar scored big gains on a short covering rally, but failed to rise above key levels. The pound fell nearly 2 cents against the greenback on worse than expected British trade figures. And oil prices ended higher, rising 13 cents a barrel in New York and 7 cents a barrel in London. The National Economic Commission, formed after the 1987 stock market crash, today came out with its long-awaited report. But as Washington correspondent Dennis Moore reports, the commission was unable to reach a consensus on how to deal with the federal budget deficit, dividing into Republican and Democratic camps.
Given a year and $1 million of taxpayer money, the National Economic Commission was supposed to come up with a long-term solution to the federal budget problem. It didn't.
The bipartisan mouse that was supposed to roar did not even squeak, and it fell into the abyss of partisanship.
It was an elite group of government, business, and labor leaders who were supposed to have the clout to negotiate a deal Congress and the president would accept. But George Bush took a non-negotiable position on taxes during the campaign, and once he was elected, the commission Republicans decided to back him as he squared off with Democrats in Congress.
It probably would be redundant, maybe even a problem if the NEC had to travel that same ground. So it may be a good thing that we are getting out of the way and leaving the real gladiators to negotiate the hard points.
So the commission's Republican majority report opposes new taxes and endorses the flexible freeze, the balanced budget constitutional amendment, and the line item veto. The Democratic minority report says the president's economic assumptions are overly optimistic, that the flexible freeze is unbalanced in favor of defense spending, and that the president's plan is just a short-term fix to avoid Graham-Rudman-Hollings cuts in October. The Democrats say the commission wasn't the stalking horse for taxes that Bush feared.
There was never a bipartisan negotiation about whether there needs to be revenues and what kind of revenues. So this charge about it's a stalking horse for taxi is just absolute nonsense.
Presidential commissions are supposed to provide political cover for unpopular decisions, as did past commissions on Social Security reform and Pentagon base closings. But there has to be a consensus among the politicians to accept a commission's decision.
In the absence of that consensus among the politicians or an imminent crisis, the commission was doomed.
So, in the words of one anonymous commission staffer, the NEC report will land with a thud, and they'll all go home. In Washington, Dennis Moore for the Nightly Business Report.
Economic austerity moves aimed at bolstering Venezuela's finances have led to serious riots in 17 of that nation's cities. The death toll has reached 119 in Caracas alone after 3 days of riots sparked by price hikes on food, gasoline, and bus fares. Those measures were taken to pave the way for the International Monetary Fund to grant Venezuela a $1.3 billion loan. And yesterday, the IMF tentatively agreed to grant that assistance. With me to discuss the Venezuelan financial situation is Reuters correspondent Claire Miller in New York. Claire, there is now growing concern that Venezuela may be forced to declare an all-out moratorium on its debt payments. Is that likely to happen?
Well, the Congress in Venezuela is meeting tonight, and they are going to be discussing this issue, exactly whether they should declare an interest moratorium. Obviously, this is a matter of concern to the banks.
And what do you think is likely to come out of that meeting?
Well, already Venezuela has suspended principal payments on its public and private sector debt, and interest payments may be just another step, which is inevitable, pending a rescheduling of its total debt, which is about $32 billion.
Now, what about this $1.3 billion IMF loan? Will that be enough for Venezuela to work out its problems, at least in the short term?
Well, not really, because they won't be able to draw that loan down for at least another 2 months. So Venezuela is still facing a severe cash crunch. And in the meantime, it's trying to get about $600 million from commercial banks in the U.S. and other countries to tide it over.
Now, there is a plan on the table regarding that would use existing oil sales to finance that loan. What are the chances for that to come about?
Well, bankers say that's still at a very preliminary stage. What they're looking at is the possibility of advancing cash against future oil sales. It's just one of a number of proposals involving collateralized loans. They also looked at the possibility of using gold. But that, too, is a long way off and not going to help Venezuela over the next couple of weeks.
During this immediate crisis.
Right.
Thank you very much. We've been speaking with Claire Miller of Reuters in New York.
The Organization for Economic Cooperation and Development warns that the next world debt crisis could involve Eastern European countries. In a report issued today, the OECD says that if the rise in world interest rates continues, Eastern European countries will have trouble meeting payments of their growing debt, now said to total some $129 billion. The report singles out Bulgaria and Hungary as two countries which could suffer a liquidity crisis if Western nations cut off new loans.
Meanwhile, the Federation of Western European Countries, the European Community, today attacked a new U.S. move to boost subsidies for farm exports. At issue is a request made to Congress by Agriculture Secretary Clayton Yder, asking for the removal of ceilings on how much the U.S. can spend on subsidies under the Exports Enhancement Program. The move is intended to strengthen Washington's hand as it enters into talks with the EC next month on the reduction of world trade barriers. But the EC claims it calls into question the U.S. commitment to reform its agricultural policy.
Poor growing conditions on Wall Street today. We saw a flood of selling and a drought of buyers. Let's have a look at the Dow. Broke a two-day winning streak with a loss of 15.35 and just about 200 more issues down than up. 31 new highs for the year, 12 new lows. Topping the active list on 3.7 million shares was First Bank System. That's the Minnesota-based bank holding company. All that volume is probably an aftermath from last week's ex-dividend date. Down a quarter today. Church's Fried Chicken off an eighth. Although the word has it that Copeland Enterprises will extend its $11 share buyout bid to the 21st of this month. Hospital Corporation of America up 1/4. It announced the percentages of the financing, the bond financing for this management-led buyout today. Columbia Pictures moving up 1 1/4. It's been strong all week on takeover rumors. Some say Sony is accumulating the stock. Emhart Corporation, the subject of pro and con comments in today's Herd on the Street column in the Wall Street Journal, down 1/4 today. Public Service Enterprises was unchanged. USF&G fell a half, even though it's boosting its quarterly dividend from 66 to 70 cents a share. American Telephone dropped a quarter. Tosco edged up an eighth. It plans a 1-for-5 reverse split later in the year. Circle K edged up 3/8 on vague takeover rumors. AMR, parent company of American Airlines, once again down 5/8 here. It's been a bad week for the airline stocks. General Motors off a full point. Chrysler was unchanged, although rumor has it that Chrysler's board of directors, when they meet on Thursday, will boost the dividend. It's been at 25 cents quarterly since 1987. IBM in a weak high-tech sector down 1 5/8. Same story with digital equipment. Eli Lilly bucked the trend, moving up 1 3/8 after an analyst at Solomon repeated a buy recommendation and increased 89 and 90 earnings estimates for Lilly. NWA, another weak airline stock, off 2 1/8. Athlone Industries, which moved up 1 3/4 yesterday after announcing a 2-for-1 split and a 25% boost in the cash dividend, up another 3 1/8 today on news that BSN Corporation has acquired a little over 5%. DeGiorgio Corporation rising 2 points. Company had no news, but recently investor Arthur Goldberg said he owns 9.7% and may seek control. Intertan, that's the spinoff from Tandy a few years back, up 2 1/8 points. The latest Fortune magazine has very positive comments, hinting that the stock should get to 55 sometime this year. Atlas Corporation rose 1.5 points on news of a 2-for-1 stock split, and the company says its gold reserves during this past year rose 19%. Keystone Consolidated down 2 3/8. It was up 3 points on Monday on takeover talk. Nothing happened. A little profit taking, I guess. And Chelsea Industries down 2 points today. Now, about 3 weeks ago, that stock in one day jumped 10 points on news that Kane Miller had acquired 10% and had a sort of a proposal for a $27 a share possible buyout bid. Nothing's happened there. Over in the American Exchange, a loss of 0.29 on the market value index. Trading volume up 100,000 shares from yesterday's pace, and exactly 50 more stocks losing than gaining. Imperial Oil topped the active list, down 1/4, followed by Texas Air, which rose 1/2. Data Products lost 1/2, Wang B off 1/8, and then California Energy finally rebounding up 1 1/4. It's been off sharply over the past week after Kidder Peabody put out a sell recommendation on that stock. Ford Motor of Canada, after rising 3 points yesterday on sharply higher fourth-quarter earnings and news of a special dividend of $7 cash Canadian, up another 5 1/4 today. Science Management fell 1/2 point. The company reported 88 year-end earnings, 22 cents, down from 87 earnings of 64 cents a share. NASDAQ trading a gain of 0.09 in the composite index, volume up about 6 million shares, and about 9 stocks up for about every 10 down. The 100 index fell 0.38. Apple Computer topped the active list, down 1/4 point, followed by MCI Communications, which rose 1/2. Then Lynn Broadcasting, which has been under heavy profit-taking pressure over the last 3 sessions, down another 1 3/4. No change in Sun Microsystems. Novell dropped 1 point. Intel edged up 1/8. Microsoft down 1/4. Telecommunications A up 1/4. Reuters Holdings gained 3/8 of a point. And KinderCare, 10th in NASDAQ volume, up 5/8. Rumors on the street that the stock may be under accumulation by the Bass brothers. No comment from the Bass brothers. Irwin Magnetic Systems rising 4 1/4 points. Cipher Products has proposed a $13 a share buyout bid. And then Go Video rising 2 7/8. It's in a pact with Samsung to have Samsung manufacture its dual-deck VCRs. And finally, United Savings Bank of Virginia down 4 1/2 points. State and federal regulators are leaning against United Savings merger with 3 other banks. And that's our Wall Street wrap-up. Jim?
Well, Paul, the Conference Board reports that U.S. consumers last month regained the confidence that they lost in January. The Business Research Group says that consumers were more optimistic both in their present and future expectations due to the continuing vigor of the economy, which it says may point to a lively business environment in the months ahead. However, rising interest rates appeared to be cutting into consumers' plans to buy homes and major appliances.
Well, Jim, meanwhile, the National Association of Realtors reports that housing is likely to be less affordable in the coming months for first-time buyers. While the group reports that the median price of starter homes prices declined slightly in the final quarter of last year, it believes that trend will soon reverse as interest rates also rise.
At least through the first half of the year, we're expecting to see mortgage rates increasing. We're expecting to see housing prices increase in the first half of the year. Those two in tandem will more than offset the increases in family income that these renter families that are likely to be looking for their first home would be experiencing.
Prellin adds that the decline in home prices during the fourth quarter occurred primarily because of seasonal factors.
January turned out to be a fairly good month for the nation's construction industry, as spending on construction projects went up 0.4% from December levels. Most of the gain reflected a surge in non-residential private construction, with construction of multi-family housing also rising and single-family home construction holding steady. However, spending on public construction projects fell almost 5%. Coming up, Tom Peters says Fortune 500 companies need to inject a little melodrama into their boardrooms.
Has asked for federal mediation in its contract dispute with U.S. Air. The move comes only a day after the union and U.S. Air began talks, with the airline offering a 3% wage increase to its baggage and air freight handlers and catering employees. But the carrier also wants to keep its two-tier wage system, a move opposed by the union. If a plea is granted, a 30-day cooling-off period will begin, setting the stage for a possible strike against the nation's sixth-largest airline.
In tonight's commentary, Tom Peters, author and founder of the Tom Peters Group, says that Fortune 500 companies need to take their competition more seriously.
I recently presented a seminar to a group of Fortune 500 chief executive officers. Afterwards, one of them came up to me and said he thought I'd done a great job, but a couple of people had said to him that they could do with a little less of Tom Peters' melodramatics. Melodramatics, is it time for them or not? You be the judge. For me, 1988 will principally be remembered as the year in business that Sears Roebuck was virtually forced to sell its 110-story tower. Why? Because the likes of former Pipsqueak Walmart from Bentonville, Arkansas, is pushing it all over the block all around the country. Automobiles, venerable GM, despite protection from Japanese imports and the lousy condition of its prime domestic competitors at the turn of the decade, has nonetheless managed to lose over a quarter of its market share since 1980. Invincible IBM, the most important market today is PCs and workstations. In the PC arena alone, IBM in just 24 months has lost over a third of its market share. And speaking of the high-tech world, in about 36 months, the last 36 months, the U.S. as a whole has lost 22% of its overall worldwide high-tech market share. And how about cameras? Beaten and battered in the photo finishing mark by the mom-and-pop mini labs, Kodak has also, of course, been pushed around in the camera world by the likes of Minolta and Canon. Sony, in fact, just recently announced a new filmless camera. What did Kodak say? Well, we don't see this as being a threat for the foreseeable future. Want to bet? Honda's chairman says a 300% productivity increase is in the books pretty soon, and on that story goes. If you ask me, it's about time for melodramatics in this country. We are melodramatically losing our marketplace, and I think a little more drama should be injected into Fortune 500 boardrooms. I'm Tom Peters.
Recapping tonight's top stories, personal income takes a big upward move in January, but personal spending doesn't.
Stock prices move downward on Wall Street as the Dow Jones Industrial Average loses more than 15 points to close at 2,243.04.
And looking ahead to tomorrow, commentator Arthur Laffer gives his view of the savings and loan crisis and efforts to bail out insolvent institutions. Now with tonight's last word, here's Paul.
Those in search of a job are advised to put their best foot forward in their resumes. But employment expert Robert Half reports that many prospective employees instead manage to put their feet in their mouth. Half quotes one New York job applicant as writing that he was intimately involved in every aspect of the company from the beginning right up to its present bankrupt state. A Chicago data processor wrote that he was precise and accurate with numbers. But when it comes to clarity, how about this sentence? These greetings serve to illumine opportunity, the intent of which acceptation I would have to be as a common purpose to business. Now, I'll give you two guesses who signed that. A Washington bureaucrat, and B, a Washington bureaucrat.
Sounds like they need a crash course by Tom Peters. Right. That's it for this edition of the Nightly Business Report for Wednesday, March 1st.
Now for Linda, Paul, and all of us in the Nightly Business Report, I'm Jim Wicks. Good night.
The Nightly Business Report is made possible by A.G. Edwards, providing financial services through more than 340 locations. A.G. Edwards, a century-old tradition of putting the customer first. By Kidder Peabody, one of the world's major investment firms. And GE Capital, providing business with comprehensive financing. Two companies of GE Financial Services. By Digital Equipment Corporation, offering complete computing solutions to give every desk a window into your entire organization. And by contributors to public television. Reuters, the world's largest electronic publisher, provides the Nightly Business Report with news, market data, and communication services worldwide. For a transcript of this program, please send $4 check or money order to NBR Transcripts, WPBT, P.O. Box 2, Miami, Florida 33261-0002. Please include the date of the broadcast.